What's going on? Who's here with me? I actually realized I put the Friday Night Livestream intro thing up there. Whoops. Actually need to change some stuff around on that anyway. Oh, looks like did I already do that? Did I just use the wrong... No? Did I change them all? I did. Interesting. Okay. Never mind. I just hit the wrong one. So who is here with me tonight? I see there's at least one of you. So if I click out of... There we go. Okay. Excuse me. If nobody's here, I have no problem kind of just going over my new strategy just to talk about it. But I'm always hoping that somebody's here so we can answer your questions. Such a dirty fake out this one was. This one was nice. Not too bad. None of these really gave back the full move though. They just hung out nice and extended. This one gave back most of it. This one was a little bit harder to read though. A lot of volume. It's so hard to jump in when the candles are that big, especially when it's not that extended. I think that's the issue there. But okay, well, if nobody wants to talk, if you're just lurking, it's fine. I will go ahead and just kind of go over my strategy. All right, so in layman terms, the new strategy is pretty simple. What you do is you look for the... My dog is literally about to get stuck under a chair. One of the kids' chairs. Anyways, so what we're looking for is an intense move. Mainly something like RCL would be a good example. So if we scroll out, you get some chop, 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 and then look at this intense move, right? So that's what we're looking for. We're looking for a nice intense move on some volume. And then what we're looking for after the intense move is already happening is the big volume. We're looking for that huge volume to come in, and best case scenario, it's also going to be a doji type candle. So in this instance, the big candle ended up engulfing, and then it was the next candle where it slowed down. The volume kind of slowed down as well, and just all of that combined is a sign of a reversal, right? So on an extended move, if you remember, or if we're playing the front side of this, you're trying to feel the top and you're looking for the move back down. Well, if you're trying to play the back side of it, you can wait and wait and wait. The only problem is you're never going to get the top. You're also always you're gonna have some trades where you just miss. Like there's just gonna be trades that you miss because, say, this thing goes up, 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 hits this 52 area, and then there's just some massive selling that goes on right away, and this thing just dumps like right down to, say, 51.30. And unfortunately, you just can't trade those. So those suck, because if you're playing the front side, you get in for that move and it's awesome. But if you're playing the backside, it's a little safer. You have set risk, and you can still catch some pretty big moves. TSM, for instance. If we scroll out, this one came all the way back down to VWAP. Definitely 50% of the move. So there was definitely a lot there. I mean, technically you could say we'll just use the first candle. Right there. Come on. So that thing literally came down pretty much right to 50%. VWAP was there, and that's where it bounced. That was the only one that I traded on Friday that did that. If we go to RCL, we use the same fibs, bottom to top. You can see the 50 is all the way down here at 51.10 area, and it did bounce off of it after here, but at that point you could have technically, moved this up to here. So it did go a little, but VWAP was there as well. But as you can see on the move that we were in, it didn't even come close. And we could kind of read that on that second move. And the other one we traded was NRG. Same thing. This one just did not come back down. Beginning of the move to the end of the move. And as you can see, it made it about halfway down to the halfway point. So about 25% of the move it gave back. We're just in some weird times at the moment where we're just not getting those full pullbacks that we're usually accustomed to. So front side, back side, no matter how you're playing it, unless you're being really patient and letting these things die out over the course of the day, we're used to getting into these trades and they just dump and then they just kind of work out within the next 10 minutes, and it's just not happening lately. So something to adjust to. But again, just looking at NRG, this was probably the best example I have for the strategy. Looking for extension away from previous resistance, right? The more extension, the better. You also would like to have some extension away from that EMA. It just shows that it's really strong. So once we get the extension away from VWAP, the extension away from previous resistance, the extension away from the EMA, like they're not all 100% needed, but that's what you're looking for. And this one isn't even the best example because you can see that 9 EMA. Let me turn my flux off. I always forget to turn that off. And you can see the 9 EMA right here. It was kind of riding it, and until this last little move, it wasn't really that extended. But it finally kind of found the top, and if I'm not mistaken, the high from yesterday was right under this. So it kind of went right through it, and not yesterday obviously, but Thursday, and it was kind of consolidating on top, and then it started to break down. And if we really zoom in here, we got our candles 33.83, 33.84, 33.82. So once that breaks this candle, that's where you're looking to enter, risk off hive day, and you're looking for the move back down. The cool part is we have a button that does all the work for us, where it's going to give us, right now I have it set to $25. I'm just making sure it works exactly how I think it's supposed to work. So it's going to calculate my my share size based off of my entry, which is going to be on the bid. It's going to take high of day. So it's going to do high of day minus the bid, and it's going to take that and divide it into 25. So how many ever cents it is. So if we pull out the calculator, we could do the math in our head if we really wanted to, but obviously a computer is much faster to do it for. So 33.92 was the high at all times here. Our entry we're looking for is 33.82, so 10 cents. So obviously we could do that math, and it's going to be 250. Oops, hold on. Get my numlac back on here. All right, so it would be 25 divided by 0.1 is 250. So you would have 250 shares at an average price of 282. So if we come over here and look at the chart, if we were looking to take 250 shares all the way down to 33.47, let's do the math for that. So 33.47, or our average 33.82 minus 33.47 is 35. So we're risking 10 cents to make 35 cents. So you're looking for 3.5 to 1 as far as your risk reward ratio goes, just to get to the 50, right? Imagine if you're trying to come all the way down to VWAP. Let's just be realistic and say we want to get to this previous resistance, and we'll even front run it a little bit. So 33.30. So let's add another 17 cents to that. So now we're looking at 5. We'll just say 5. So now we're looking at 5 to 1 on our entry. So you're looking to make $125, only risking $25. It's pretty awesome. And when this starts to work out in your favor right away, you can definitely try to let it ride. Just put your stop on. My plan is, if we get an entry at say 82 and it comes down like this, there's no way I'm going to let it go back high of day and stop me out. I'm going to at least get break even because it definitely tried. And if it doesn't want to continue, then that kind of sucks. I'd rather just take the break even trade and move on and find one that is going to work out right away. Like on RCL, where it came down, we got in, and then it went right back up and stopped us out. Those are going to happen. Unfortunately, that's just trading. You're going to have losers. But the ones that we're really looking for is where we get these great entries, and it gives us a really good chance at a high risk reward. You figure if this one works and we go all the way down to 33.30 and we cover our full size at 33.30, we just covered 5 losers, right? So if this only works 1 out of every 5 times and that we get that 5 to 1, we're good to go, right? We're going to at least be break even. But if we can make that work, say, like every time, if we're at least getting say 2 to 1 or 3 to 1, it starts to add up. Like you're going to start getting a little bit better. And the win percentage on this, just from my testing so far, has been pretty good. And watching other people like Albert trade this exact same way, he's 90% with it. So it's definitely something to look forward to. It's definitely more my style of trading as well. I don't know if it would fit your style per se, but I love the idea of having a set risk every time I get into a trade. I know that when I hit that button, this is how much I'm risking. How much I make is a different story. If I get a great entry, I can make 5 to 1. If I get an okay entry, I can hopefully at least get 1 to 1. If you could still make 1 to 1 on every one of these trades, like if you can make $25, risking $25 every single time, you're still gonna be in a good situation if you're winning even 80% of the time. Because if we want to do the math on that real quick, 25 times 8 and then 25 times 2. So it'd be 200 minus 50, so you're winning 150 every 10 trades. That's pretty awesome. Even if you're only winning 70%, it's still not bad, right? You want to be, when you're winning only 1 to 1 on your trades, as long as you can be over 60%, you're still making money. Like you're making okay money. Let's just do 60% real quick. 6 times 25 is 150, and then 4 times 25 is 100. So you're still making $50 every 10 trades at this scenario. So if you add a 0 to that, you could be making 500 every 10 trades. So it's really, so if you're risking 250 every time, it would be 500 instead of the 50. So it's all scalable. It's all relative, but that's really the the strategy in a nutshell. I wish whoever's here, it says somebody's here, I wish you could ask some questions, maybe something I'm not thinking of, but really you're looking for the same things I was looking for on the front side. You're just being patient and you're waiting for it to put a top in, and you're looking for that first 1 minute candle to break its low. That's all you're doing. And then you jump in and you're risking off the top your set amount, and that's it. You let it go. Zeus, it's you. What's up, man? I could see that somebody was sitting here lurking, which it would have been fine if he didn't say anything. I don't have anything else to go off of. It's more of this is supposed to be more of about you guys asking questions and stuff like that. So I can't really, it's hard for me. Like I know my strategy, so it's kind of hard to talk about it more so, and especially because it's so simple. It really is just a simple strategy. But there is a lot of intuition that goes into it. There's going to be times where like you got to read the volume and you just you're not feeling it. Yeah, I don't know if it's counting me, but I'm not on. Usually when I have the manager up, like I have, it doesn't count me. But I don't know. I'm pretty sure it's not me. But when I click participants too, it doesn't show you. Oh, it does show you now. I guess maybe because you had to type. Is there any questions that you have specifically about this, about anything? I'm not really, like I said, I don't really have too much to talk about as far as my strategy goes. I'm trying to think of. There was one. Was it? What was it? ESCO, ECSO, ECMO, EMCO. I can't remember what that ticker was from yesterday. Let me look in the chat real quick. Oh yeah, that was, I missed one in the afternoon yesterday too. That KTOS. Remember, I came back from dealing with the kids, and everyone's like, "Did you get some KTOS?" I was like, "No, I wasn't here." Yeah, see, these are the ones I was talking about earlier, where when it shoots up like this and then comes right back down that quick, even on a 1 minute, it's really hard to read. But if I was watching this and I saw it make this high 2043, goes up through 2058, and you can kind of just feel it starting to come back down, you might get a late entry on it, but even at like say 2030, you still get in. You're only risking 28 cents, and this thing ended up coming all the way down here, so 2030, almost a point, right? So that's 5 to 1. Well, like 3.5, 4 to 1. Let me find that other one because it was a good one. I was kind of mad that I didn't get it. Oh, Ecom, that's what it was. So this was another one. I kind of stayed out of it because of the spread. I remember the spread was really bad on this one. But same thing, comes up, and this is a perfect example. So it comes up, and then it tries to come back down, doesn't even get down. I mean, obviously this would have been a tough one because the 1 minute, that was all the way down there. But we would have been looking for this candle here to break this candle. So that would have been our entry underneath that candle. But then you're not really that extended. So then it's kind of a question of whether you liked it or not. But when I actually pulled this up, I saw it off the scanner on this move here. And the reason I didn't jump into this one when it came back down through this 1984 area was just the spread. I remember it dropped through 1984, like right to like 1975 or something like that. I was like, oh, that's a big spread. And I was looking at where it was here, and I saw that there was a lot of potential, but I was just like, I don't like that. And I don't know. It wasn't like really extended enough for me to really like it. And so I stayed out of it. But the one that I was actually kind of mad that I didn't take was this came up and then it went high. It went high of day. And look at this. Look at the extension here. You're talking 1910. So you're talking $1.20 through the previous resistance. And then here it went through by 36 cents. Came back down, came back up, touched that resistance again from earlier, got rejected. So right here, the break of this candle, 1994, should have been an entry. Beautiful. I was mad that I missed this. And basically what it was, it's the same principle, but you're really looking for confirmation because you're not on the first extended move. But you see these fake outs, they get that one last little push, and look at the volume, right? That's where all the volume was. And all that volume came in and said, nope, we're done. And then as you can see, it started to come back down, came back up, retested lower high, and then as you break that area, boom. You see this all the time. And I was actually mad that I didn't trade that one. I didn't have the chart up, but in hindsight, I wish I would have kept it up because that would have been a really great trade. So all it does is, let me pull the calculator back up. So in this case, high of day was 2067. Our entry, we would have been looking for right under this candle. So say 1993. So we see 1993 on the bid. We hit it, 2067. 2067 minus 1993, 74 cents. So right now I have my risk per trade at 25 bucks. So it would take 25 and divide into that 74 cents. So our share size would be 33. And that's what the button does. It does that equation. It calculates. It will give me 33 shares or 34. I don't know if it rounds up or down, honestly. Pretty sure it always rounds down, I think, to stay within risk. And it'll enter the trade right there on the bid, give me those shares, and it'll put an automatic stop in for me at high of day. So if it goes high of day, it'll stop me out. I lose 25 bucks. If there's slippage, obviously I could lose a little more. If I get out a little bit earlier because it's pretty obvious it's going there, I might stop out a little early on my own. And that's that. And then you're basically in this trade until you want to get out. So 1993 to 1967. I don't know why I keep Xing it out. I should just move it over. And let's look at the overall move here. Even if you're looking to come back down to this previous resistance at 1910, you're talking 83 cents. You're risking, what was it, 70? Or no, it wasn't 70 cents. Or yeah, it was 70 cents. So you're making a little bit more than 1-to-1 looking to come back down to that previous resistance. And like I said, that's the other thing too, is you got to take your risk to reward into account, because like if you're looking at where VWAP might be by the time it gets there, you think it might bounce off of there. Is this thing strong overall? Do you think this thing could be an all-day fader? Like there's a lot of other things that kind of go into this. Is it up on news, earnings, whatever it may be, that kind of formulate into your decision making. But if you're okay with a great setup only making you say 0.5-to-1 just because it's a great setup and it works a lot of the time, you just might not get a huge profit out of it, then who cares, right? You take the trade, you're only risking a little bit, and then say this candle comes down here, tests VWAP and pops back up. Worst case scenario, you just get out break even, and so be it. You gave it a try, just didn't do exactly what you wanted to do, and you move on. And that's what I love about this trade is usually when you're getting into these trades, it's working, right? It's about to work. And if it doesn't work, then obviously you might have just read it wrong. The stock wasn't ready to do that move yet. And you can either just kind of get out right then and there. You can let it do its thing and try to go high of day. There's a bunch of different things you can do there. And that's what I love about it is usually when you're getting in is when the move is actually happening. Where on the front side, sometimes you're looking for, the move to stop, and sometimes it keeps going. So you're kind of dealing with red at first. Yeah, it would only be one entry. That's correct. Now you can add to a position using the same thing. So say I wanted to risk $50 total. What I would do, let's go back to NRG. I think this might be a better example. Okay, so say my first entry was up here on this candle here as it broke down through 83. We got in at 82. It's coming down. Say we don't take any profits off, it bounces up and it starts to come back lower, right? That's a pretty good sign that we're bouncing. That's a sign of weakness, and we want to look to add to our position. Well, if we really want to, we could just hit the button again. We're going to get fewer share size because it's still going to risk off the same high of day, but at the same time, we're going to add some more shares to our position. So basically, we'd be risking $50 now if it wants to go back to high of day, but we're getting more share size in just based off the current price. So you could add to your winners, but in this case, you'll never have to add to a loser per se, or you're not scaling in like I was on the front side. Well, Yeah, essentially. I'm still looking for the same reversal that I was when playing the front side. I'm just looking to get in on the backside. Brian from Intensity Stockwatch, he always would say this, and it would just never register in my head. But he said, think about when the stock's going up and you're trying to play the front side. Well, if you just waited and tried to get in on the backside, like let's say extension through this previous resistance, you really like this candle here, you jump in for your first entry here. Keeps going up higher, tries to come back down, pops up a little bit higher, kind of stalls here, you get to add here. Keeps going, you finally let it top out and say you actually look to add your 2 on the backside, like right around here. Well, even let's just say you top tick this with your 2, right? 1, 1, so it's going to put your average right here, and then you hit it for the 2, it's going to bring your average up halfway from that candle. So if we get rid of this candle, and this candle, so if you're doing 1, 1, 2 and you nail the top with your 2, this is around where your average would be. Well, if I just wait for the move to be over and I look for a trigger to get in with that 1 minute candle being broken, look at that. Not only do I have about the same average, I actually would have ended up with a better average in this case. So now, like I said, the disadvantage to doing it this way is when you get stocks like, I forgot, KTOS. When you get stocks like KTOS that make a move, you're probably gonna miss these moves because there's no trigger there, right? It's just a huge move, and then wha-bam, right back down. So there's no way there's no way to get triggered into this trade. It would have to just be off a pure feel. What you could do is as it's going up, because I'm pretty sure Brian actually started this like here, and then he hammered it up here. So his average was probably somewhere like in this area right here. And so let's do that. But if you really want to, on moves that are happening really fast like this, as that thing's coming down, if you think that that's it, you can still hit it, right? You can still hit it around this same area, and you're just risking high day. If it goes back to high day, then so be it. But you're getting in on that drop, and if it continues to drop, then you're good to go. So there's not saying you can't play the backside even on moves like this. It's just a lot harder because you're not getting a trigger. It would be complete feel, be complete intuition, and you'd have to kind of read the price action on your own and kind of go off of that. So it's definitely a possibility. And like I said, the thing I love about this the most is on the front side, I had these buttons which are very good at determining the risk to get about the same risk per trade when you're scaling into a trade. But the problem is, say you get into a trade right like this. Like if we go back to OMI, OMI is a perfect example. If we go back to the day where it made that run right here. No, was that the day? No, it wasn't. Okay, it was earlier in the week. Bear with me for 1 sec. Come on, chart. There it is. So we started this trade here. Let me pull up the let me see when my first entry was. The button does load and send, yes. You can make it so it only loads. You would just right click, edit. So in here somewhere it says buy send right here. Or that's actually for the stop. So that you want to keep it send. Over here, before where it says trigger order, right here. So sell equals send. You would just change send to load. That's all. And then the rest of it would stay the same. So you could hit load, like here, let me show you. So if I change this to load, and let's go, what was it? Well, let me just show you this real quick. We can go back to that. I was trying to find one that was near high of day currently, but why is the last price line all the way down there? What's one that's like near high of day at the moment? any of the ones that I was looking at? RCL? No. Well, I mean, it doesn't really matter. But like, let me just hit it. So let me change it just in case for whatever reason. Can't get valid price. It's probably because it can't read the price. Let's see if it would work here. No, it's going to tell me the same thing. So I guess because the market's closed, there's no data going through. It can't determine what the price is. How will you send it after? So what it does when you have a button that loads, because like all of these are load buttons, as you can see how they just load the share size in. It'll also pop up. Well, this actually doesn't. Let's see. I was gonna say, yeah, okay, there we go. So the shares left button is a load button. So see how it comes up and it says short prepare, buy, enter. So this is to buy shares back. So what I would do is I would put everything in and then you would just hit enter on it and then that puts the order through. So when you load an order, it's going to do the hotkey as if the hotkey was a direct send, and it's going to load your price, your shares, everything, and then you would just hit enter. If you're using it for the short, you would obviously hit enter on the short because it'll come up, the enter part will come up on the short side. So the only problem with that is you hit the load button and say it drops a couple cents. Well, then now you're actually risking more because you're taking the same amount of shares that you would have up a little bit higher, but the price is lower. So now if it goes the high of day, you're taking more shares at a lower price. So that's why I like to be convicted and then just hit the button. And then that way I get in and the risk is always the same. So let me go back to OMI real quick. Scroll, baby, scroll. All right, so our first entry on OMI, oh geez, it was worse than I thought, was 11.12. So we saw this extension away from this previous resistance on this big candle here, and I'm assuming it felt like the top. It does look like it came back down a little bit, yeah, just barely. But then this thing just went, right? So this is why playing the front side absolutely sucks sometimes. Now, keep in mind, let's use the 1 minute here. Is it gonna let me go back that far on the 1 minute? Let's hope so. Okay, sweet. So this thing was fakey, very fakey. So yeah, you can see that when I got in, it did come back down a little bit, and then it decided to go up. But we were obviously looking for that previous resistance, and then this thing just kind of went. So if you look at it, it never breaks. It does break it here. So 11.32 gets down to 11.19 and then goes higher. So this could have been a stop out. And then it actually did what I just told you too. This would have been a double fake out, which would have sucked. It went a little bit higher. Remember, we were just talking about this on Ecom. So after a nice little move, it fakes you out, goes a little bit higher, tries to come down, tries to go up higher, makes a lower high, and then goes lower, right? That's your entry right there. And then look at what it did. Complete fake out. So that would have got you twice. But then after that, it comes up. This is the candle you'd be using. Never breaks that low. Keeps going. This one would have been iffy because I don't like using the actual high candle. I like using the one after or the one before it, because if you use that actual high candle, it could just be tricky because it's not really like an actual pullback. So I don't know. Or not the one before it, the one after it. Sorry. So this one. And because you could say you could get an entry at the bottom of this one, right? Because you're making the reversal, but it just never seems to work that way. I'd rather this candle after the high is made be the one that you're looking to break, because then you get that consecutive candle down. And obviously that one does this. So you could have got in here, and again, it was a fake out. So man, this stock would have sucked either way. But yeah, I ended up playing the front side of this, and our first entry was down here at 11.12. Our last entry was at 14.07 up here. Second entry was at 11.48. So we'll actually just leave that 1157 there. Just that's close enough. 12, 12, 13, and 14. So we had 1, 2, 3, 4, 5. We had 6 entries on this. 1, 2, 3, 4. This does only have 5. Oh, this 1080 line was the previous resistance. Okay. Oh, get out of here. Get out of here. Okay, there we go. So playing the front side, these are the entries we ended up with. And as you can tell, we could have had 2 entries in here with the new strategy, and we could have even had another one right here, and we would have lost $75, where we ended up losing $160 the other way, because when you're playing the scale-in, you have to have a higher risk to reward ratio, just because it works so often. But when it doesn't work, it's just going to happen to be a little bit of a bigger loser. And as you can tell, I mean, I don't think, did this thing ever actually come back down? Let's just go to the 5-minute. No, not really. Came back down to 13. I remember our average was at like the low 12s or like mid 12s, so it never came back down there. But as you can see, playing the front side can just be, what I was getting at with that is playing the front side, you have a good indication of the range, but when you get in, I wasn't expecting this thing to go further than 12 if it did, and it went to 15, right? So I wasn't expecting it to go a whole $1, and it not only went that $1, but it went an extra $3. But if you're playing the backside, you never have to worry about that. You never have to go, I wonder if this thing's going to go $4 or is it only going to go 30 cents? Like you don't have to worry about it. You just play the backside, you wait for your entry. If it's there, you take it. If not, then you just let it go. So that's what I love about the new way of looking at things. Yeah, when you set those buttons up to load, that's the only problem I found with buttons that load. The only reason I have this one for a load button is, say the price is moving, at any time I can hit the shares left button and it'll just tell me how many shares I have left with the current high of day being where it's at, that I could add to my position to get to a max loss of $150. So when I was scaling in, my max loss on a trade was $150. So say it started to kind of move down and I wanted to look to add, well, I could look at around that current price, how many shares I could add so that if I went the high of day, my max loss would be $150. So that's why that's a load button. But every other button I have is just a send button. Well, I mean, and I do have like load 60, 75, 90% of my position, but these are for take profits. So if I'm into a position and I want to just load up and then I can change the price to where I want it and then just hit send, that's what that's for. I did not like it. That's why I asked. Oh, you didn't like how it does the load? Yeah. I would much rather just be convinced that I'm going to take the trade and just have it go straight through. That way there's no like doubt in yourself and all that. You see the setup, you take the setup. You have your set risk, you're good to go. If you're still worried about your stop getting hit, maybe your risk is a little too high, lower it down. Get used to hitting that button because the setup's there. If the setup's there, take it. That's what it really comes down to. You can't be scared to hit the button. I used to be that way. Sometimes there'd be weeks where I'd only take one trade, and it wasn't like I was taking big trades, so it wasn't like I could make a lot of money with one trade. It was just I was waiting for the perfect setup every single time, and if it's not there, you're not gonna get a lot of trades. So, sorry, I'm like picking at a pimple. Yes, they do send a stop loss. They put the stop at high of day, and for the long one, it puts it at low of day. I wish I could show you somehow, but I can't. So let me zoom in here. So when this broke this 83 area, and that's the other thing too, you can use different time frames for this. If you want to be aggressive, use the 1 minute. If you want to be a little bit more on the safe side, use the 2 minute. So right here, as you can see, it's actually 79. It's not 83, right? So you would have been waiting for this candle here to break this candle here of 79. You would have been getting in at 78. Or you can be even safer. You could use the 5 minute, which this one actually didn't give you a good trigger. You would have had to wait for down here, which that doesn't look that great. But what I tend to do, and what Albert actually, it was a good thing that he brought up, is he'll get into a trade aggressively, and then he'll zoom out, and he'll look at the two, and he'll see if, okay, well, the 2 minute trigger's at 79, so if it breaks 79, that's good. And sometimes he'll even add to his position at that point. And then there's sometimes where he'll bring up the 5 and do the same thing. He'll be like, oh, okay, well, we got a good 5 minute trigger, I'll look to add. And then he also looks for his profit targets a lot of the times on, say, the 5. He'll look for this EMA on the 5, and he'll look for that. He usually front runs it a lot, but just as a good way to take profit. Can you do the simulated charts? What simulated charts? DAS has the replay function, but it costs like $100 a month. I bought it for, my Chipotle is coming up. I bought it for a month and I was messing with it, and for some reason they don't have it so that stops work. So every time I would get into a trade, it wouldn't put your stops in, so I'd have to manually sit there and do that. But the other problem with the demo and going back and practicing, it does help. But at the same time, it's really hard because you already know what the stock's going to do, if that makes sense. So it's really hard to actually practice, because if you already know what the stock's going to do, you kind of lose interest. You don't have any emotion. Like, you know what's going to happen. But it is nice to go back and watch the trades live. And that's why I like recording my trades, because I can go back and watch them live whenever I want. And it's nice to see, like, if I can go back and watch myself trade, watch it back, I can be like, was I reading the price action right there? What I really like to do is go back and watch the losers, because then I can see if there was something that I missed that I should have picked up on. So that's always a good way to do it. And that's why I always recommend, if you can record your trades, do it. And really, if you can, record your face while you're making the trades. Your face can tell you a lot of things that you don't know that they can until you actually watch yourself back. You can, like, because you know the faces you make, like when you're confused, you know the faces you make when you get excited, you know the faces you make when you're getting upset, when you're nervous, do your cheeks get red? Like, those are things that you can't tell if you don't record it. So if you can record those things and then go back and watch it, it'll make a huge difference. I know it did for me, as far as just like, one of the biggest problems, like I said earlier, was getting into a trade. So I started to I could see myself getting nervous every single time. And I still always have that issue. I don't want to get into a trade because I don't want to lose. But the quicker I can get through that fear, the better. I can give them to you right here if you want. Which ones do you want? Just the Albi ones? Let me reload it. Oh, I can just change it back to send. If you want to change it, you can. So for that one, the only thing you have to change, if you don't mind it just sending the order right away, is that, see where the 25 is? You would just change the 25 to whatever you want your stop loss to be as a dollar amount. So if you want it to be $10, just change that to 10. If you want it to be $100, change it to 100. Whatever you want it to be. That should be the only thing you have to change. Everything else should work as is. That's for the short. And this is the long. One other thing I can think of that I didn't mention before is the SPY as well. If you're trading a stock that looks like it's trading a little bit like the SPY, you can definitely watch the SPY and use it as the wind. It's actually pretty interesting, especially when you're trading larger cap stocks. The SPY does tend to help move a stock one way or the other. So if a stock is really extended and it's starting to make your move, you should still take the setup, but you should watch the SPY too at the same time, because it can kind of give you an indication. If it's really fighting to break down and you look down and you see the SPY is just raging up, it might be a little bit harder to get that stock to break down. People are like, oh, the SPY's going. This is a good time to buy. So just always keep that in mind too. Yeah, I'm at $25 right now. I plan to raise that as soon as possible. But like I said, I know that what I'm doing should work. I've seen it work a crap ton of times. But I wanted to bring my risk back down just to make sure that it'll work before I decide to really get it going. Yeah, the SPY is a good chart to have open at all times. I have my 4 charts, and I trade on these 3, and I always leave the SPY up on this one. Honestly, I don't even know why I have the montage up for this one, because I'm never going to trade it. You know, I'm going to make a little live change here with you, actually. I just randomly thought about it. Like, why do I even have that up? Let's do that. Close. Here's a little tip for you, a little DOS. Do you use DOS? So if you're, let me save this first. I did change it. Yeah, I changed it back to send to you. So see, I don't have a montage linked to the SPY now. Well, if you just click on the chart and then just type in a ticker, it changes it. Just a tip. It's pretty cool thing. A lot of people probably don't know. Do you have any questions? You want to talk about something else? You still got 14 minutes or so. Like I said, I can't really. It's actually an easy strat. It really isn't hard. It's hard to talk about sometimes because it's just not a hard strat to trade. It's really just patience, waiting for the setup to happen. And sometimes I guess you don't even really need a crazy like scanner or anything. I guess like you don't need a scanner for this, but having the intensity stock watch, it's such a. I mean, I'm not selling you on the scanners here. Like I said, you don't even really need them for this strat, because really you're just bringing up a chart that's running, and I'm sure there's several different ways to find those types of stocks, and that's the beauty, is you're waiting for the back end anyway, so you don't really need to be early, like playing the front side. So really you're looking for something that's running, and then you're looking for that volume pop, and then you're looking for the back. But that volume pop will almost always happen. You're really looking for that. It's a big indicator. If this thing's just going up and up and up and you never get an increase in volume, that means that the market is completely fine with the way that it's going. I wish I had a chart that showed that. I thought it was, what was the other ticker that was part of that news that came out? I thought it was mRNA. Was it the day before? thought it was yesterday. No, it was the day before. Oh yeah, and it was ABUS, ABUS and mRNA. They were on the opposite ends of that deal. But I was saying how good the setup looked. Look at these two intense moves, and then look at that volume that came in, right? Granted, these were hard to get entry. Well, let's look at the 1 minute. So yeah, I mean, it would have been hard to get entry on this one, especially this one. But just look at that volume that comes in, right? When you get those huge volume spikes like that, and then the next candle is lower, that usually means that was the reversal spot. Same here. Look at that. Big volume, almost just as big. But again, look, there's a reversal spot. Because what it means is it's coming down, it's coming down, it's coming down. Look at the volume it took to come down. But then you get that big candle, and you get all that volume. That means there's a bunch of people stepping in, whether it's on the sell side or the buyer side. But that just means there's so much interest right there in that area that, okay, we're meeting and we have all the interest. We're probably going to find a median spot here, and the imbalance of shorts or the sells is going to start to balance out. And then if you run out of sellers at that point, right, because look at how many people sold coming down, you're going to run out of sellers, and then that's what creates the reversal. Yeah, it was ABUS. The only question I have is I funded my account by going to my bank and they did it, but with the COVID now, it's really hard to go in and add more money. Any advice on bank transfers? I know that you can wire. Which bank are you with? Because I know that I'm with Wells Fargo. You can actually do wire transfers online, so you don't even have to actually go into the bank. I'm sure there's other banks that do it too. So. Plus, there's always the option of just don't lose and always win, and you won't have to add more money. I don't know how to do it. I just know that you can do it because I always went into the bank. The 2 times that I had to put money in, I went into the bank and did it too. I let them do it. I took the printout sheet that CMEG gave me. I went in, said, I want to send this amount to this, where their paper that they gave me, and they just did it for me. So I'm not really good with that kind of stuff. I mean, I'm sure I could figure it out, but I know like Kevin Avery, he's done it that way, so I know it's possible. And I have Wells Fargo, and I went on there and I see that they have the wire transfer, and it looks just like the computer screen that they showed me at the bank. So yeah, the 2 times that I've had to put money in the account, when I almost blew up the first time. So the very first time I put money in the account, and then when I almost blew up that one time after MTSI, I had to go back in and add some money. Well, if you don't have any other questions, I'm going to just go ahead and get out of here. I'm actually going to go take a shower. But at any point in time, if you come up with something, you can hit me up in the Discord. I'll be glad to answer in there. It doesn't have to be on these Saturday nights. But I'm glad you stopped by. It would have been, I don't really know how I would have talked to myself for longer than 20 minutes. So I'm hoping to get more people in here because, like I said, we don't have to talk about my strategy. If somebody else wants to come in and they want to talk about something else, it's completely fine. Because you'd be surprised how much you learn just watching and knowing how other people trade. It makes such a big difference just seeing how other people trade. You can see, okay, well, if he's going long here, I was actually looking to go short, here. But I can see why he wants to go long there. So maybe I'm looking at something wrong, right? Like there's always something to learn from other people. So that's why I love Friday nights and I love doing these strategy talks every once in a while as well, because we can really try to dive deep and really try to figure out the next step. Like how do we get better at what we're already doing? So that's why I look forward to these. And that's why I want you guys to come in and be like, well, what if if you're doing that, that's not going to work if you do that. And I want to be questioned. I want to be like, well, yeah, I want you to be like, I want to be told, well, you didn't think of this. I'd be like, you know what? You're right. So now I want to learn. I want to move forward. I want to figure out the next step for myself as well as for everybody else. Well, I like to think that as well. But unfortunately, like I always say, you have these other YouTube channels out there that are catering to the 90%. They're the ones trading the low float penny stocks. They're the ones putting up the big numbers, whether they're real or not. A lot of people like to post these demo account numbers and act like they're real. You have all these people that are catering to the Ross Cameron lifestyle of trading, and I'm just not that. So when people maybe at first glance see my trading, they're just like, that's not for me, right? I don't mind that because I read the comments of some of the other YouTubers that do that, and I would not want to deal with that. Dealing with the comments that some of those YouTubers have to put up with on a daily basis, it's not for me. Like I say, I say it in my intro video. Like if you unsubscribe from my channel, I have an intro video on my main page that comes up, and it basically says that we're attempting to make this a living. We're not here to get rich quick. It's a marathon, not a sprint. And I basically say, I'm not here to cater to the 90%. And I was like, so if you're the 90%, get out. I basically just say it straight up. And I've always been that way. I've always been very upfront. I've always been very truthful and transparent. And I want people to be able to look back, even 5 years from now. Hopefully I'm a successful day trader by that point, and they will be able to be like, okay, this guy is no joke. He's literally been showing us every single thing every single day since the beginning. Like there's no possible way that he is any different than what he is saying he is. So that's why I always say that there is no other trading channel out there like mine. Whether I might not be a big channel, but there's not one single channel out there that can do what I do. And that's show proof that everything that's going on my channel is legit and truthful and transparent. Because there's always the other traders out there. There's a day they didn't post. They took a break for a month. Like there's always something. They're paper trading and they're acting like it's real. Like there's always something. Yeah, and it's gonna come. It's gonna come. Like I said, I need to get my confidence there with it first, and I'm not just gonna add a zero, but it's gonna come. Unfortunately, the last time I tried to scale up, it bit me in the ass. I had like 24 winning trades in a row, and I scaled up. I basically doubled my share size, and that it wasn't the first trade. It was like the third trade, and then it was like the fifth trade, and then it was like the seventh trade. So it was like 3 trades within 7 trades. They were all just losers with the scaled up size, and it was like, seriously. And that was what really got me questioning. Like, it wasn't the strategy. I knew the strategy works. I watch the other ISW guys; they use it every day, but they're much better at accepting the risk. And as bad as that sounds, I'm not good at it. Like I admit my fault that I'm not good at accepting the risk. And so by finding a way to make the same type of trades, but with a set risk, it just feels so much better. Like this last week of trading, doing it that way, it just felt so much better. It felt easy. So we'll see how it goes. Yeah, you're right. Bigger wins do equal bigger losses. Not always though. That's what I'm trying to get at with this system. I think we could be onto something. Like I said, just real quick, like let's look at that second move on mRNA. I like this zoom here. I just want to find the second move here. It's coming. Let's kind of watch this in real time real quick. Let's zoom out a little bit so we can still see that first move. All right, so we're coming down. We break that level from before. Tries to fake out, and then look at this. Boom, look at that volume come in. And then look at it again. And now look at that EMA. Look how far extended we are. So now you're just looking, you're trying to find that reversal. Obviously, this isn't a good 1 minute trigger, and I'm sure the spread on this was absolutely nuts. But as you can see, even the first time when it made that move, it literally got the whole move back, went all the way back up to VWAP, and pretty much got that entire move back. And I'm pretty sure it kind of did the same thing here. It just took longer. I mean, technically, it pretty much already did. You could almost consider, you could say the move kind of started at the bottom of here. It actually went through that. It actually got all the way back up to here. So, and longs actually seem to be working better than shorts at the moment. So I've actually, that's why I added the button, just kind of looking into that, seeing if it's something I might want to get into. But yeah, if you have any other questions, feel free to ask me on Discord. I'm gonna go shower. Feeling a little stinky. I did a bunch of yard work today. I can like feel my shirt sticking to me. Yeah, of course, man. You have a good night. Have a good Sunday too. Hopefully you're getting some grilling in. I know I always like the grill on Sundays. Love me some barbecue chicken. But all right, man. I will see you Monday. Peace.